Okie dokie, hi there everyone. Today I'm going to be talking you through petty cash funds, what they're used for and how they're recorded. So I'll start by defining it. A petty cash fund is the amount of cash kept on the business used for minor expenditures such as mailing supplies or office supplies, and they're generally used when a check isn't allowed during the transaction or it's just too much of a burden. So the three elements I'll talk you through are the establishing the fund, transactions within the fund, and replenishing the fund. That should give you a pretty good understanding of how the petty cash fund works. So we'll start with establishing the fund. To open the fund, a check needs to be written detailing the amount of the fund and the cash that then gets placed in the hands of a trusted employee called the custodian, who keeps track of the receipts and all the transactions and an authorization. After you've done that, the journal entry needs to be made recording the creation of the fund. So on the right, you can see the petty cash fund is debited $250 and your cash fund is decreased by $250 or credited $250. And doing this means there's no change in your assets. You're not actually moving them out of the assets account. You're just changing where they are within the assets account. Following on from that, making transactions within the account. There are two ways of doing this. Taking cash out to make a direct payment for a transaction, or employees seeking reimbursement for payments they've made for one of their transactions for the business. And the custodian will always keep the receipts of these transactions along with an authorization needed to make the transactions. And so you don't record them when they're made. You only record them when you're making the replenishment report, which I'll get into now. So the replenishing the fund requires two things: the replenishment report and then the journal entry. So the replenishment report details the amount of the fund, the cash remaining in the fund, and then the cash needed to replenish it, which should be equal to the expenses. So you can see there the receipts from the fund are postage, office supplies, and other miscellaneous expenses, and they equal the difference between the opening and closing balance of the fund, which is good. After you've done that, you need to make the journal entry. So you can see there the postage expense, supplies expense, and miscellaneous expense have been debited their respective accounts, and you credit the cash account, the $231 needed to fill the petty fund account again. And you can see below that how the equation balances taking money from your assets and also taking money from your equity account. After you've done that, there may be some discrepancies over or under the total value of the fund. This may be because the custodian missed a receipt or was given some incorrect change. So you use a cash over and short account, which is an intermediate account, which can either have a debit or credit balance. That's about it. Thank you very much for listening to my screencast on petty cash funds.